Well, the holidays are officially upon us, and there's lots to talk about, so let's get into it. So I want to get the what's not out of the way because mortgage rates have actually increased just a fractional amount over the last week or so, and I'm not alarmed by it because really what it has to do with is illiquidity in the market, which is a fancy word for saying that a lot of the bond traders are just out on vacation. They're gone and they're coming back next week. So since there weren't very many traders, little things caused a big reaction in bonds. And so I think we're going to get back on track next week and the following week. So stay tuned to see what mortgage rates will do over the coming weeks. So what's hot? Well, it's the same as my what's next, which is 2023. A new year is about to be upon us. So I figured it's time for me to make some bold housing and interest rate predictions. And that way we can look back in 6 months to a year and go, hey, did that guy Aaron get it right? Well, let me put myself out there and we'll find out. All right, let's start with housing. What we're anticipating is low single-digit appreciation for most of the U.S. with an increase in activity. Now, if you've been watching my videos, you may recall I've said sellers are negotiating, prices are down a little bit. Well, that's all going to change once we get through the first quarter. And the reason that's going to happen is interest rates are expected to fall along with tightening supply. And we've already seen existing homes, a tight supply there. More specifically, we're going to see a much tighter supply with new construction because builders learned their lessons in '08 and '09, and they absolutely are avoiding excess inventory. We can see that from building permits and starts that are down. So that constriction in supply is going to cause a little bit of an increase in values. So from the demand side, we're going to see an increase in demand, partly because of lower interest rates, which we're going to talk about in a minute, but also because household formations. A household formation happens when one person leaves a household and starts a new one, and maybe it's a relationship or whatever, but they have a new household and they need a house. And what we saw this year is household formations decreasing as interest rates increased. So what we have is a little pent-up demand from this year, and people are going to be actively searching in the beginning, especially into the first half of 2023. So let's talk mortgage rates. We're anticipating that mortgage rates will be near 5% in the first half of 2023, which I know sounds like a really bold prediction, but look, mortgage rates have fallen significantly just over the last few months, and it all has to do with inflation. If you've watched my videos, you know that. And as inflation continues to decrease, we will see mortgage rates continue to decrease. So that's a bold prediction, but I'm standing by it. So the next reason why I feel pretty confident in saying that mortgage rates are going to decline is because of the recessionary indicators. Now, let me say right off the bat, we're not talking about a recession that we saw in '08 and '09. This would be just a minor contraction in the economy, which ultimately the Fed is trying to create, because when we have a little constriction in the economy, then it can grow at a manageable level. And there are a number of indicators that are saying we are or will be in a recession. And we can look at the savings rate and debt rates that are happening, which are going inverted right now. We also have inverted yield curves, which is 10-year and 3-month treasury bonds that are not yielding what they're supposed to. And all of these things, when they happen, a recession is pretty much a sure thing to follow. But the good news is that mortgage rates do really well in recessions, and housing does pretty well in recessions as well. So these are ultimately good signs. It's what the economy kind of needs to be able to grow in a manageable level. So thanks again for watching my housing and real estate predictions for 2023. And please remember, guys, for quick pre-approvals and even answers on scenarios, my contact information is below. Thank you so much. We are here to support you.